Awesome. Thank you very much. Thank you, Big Dogs, for joining our webinar tonight. I always appreciate your support. Tonight, we have a very interesting opportunity that we're going to be presenting to you. So, Veteran, if you can start sharing, and Veteran and myself are going to be doing, he's going to be doing most of the talking. I'm going to get us going, and you should be able to share.
Okay, let me see. 1 second, let me pull it up. Actually, I thought you were gonna share, so but let me pull it up.
Oh, I can share.
Okay, please do.
Okay, not a problem. Let me just pull it up here. All right. All right, here we go. We're ready to get rolling. So tonight we're going to be talking about Cedar Gate Apartments. This presentation is going to be recorded, so you will get a copy of the presentation. We'll also be able to answer any of your questions. If you do have a question, you can put it in the chat. If we can, it's really hard to multitask, but we'll make sure that we get all of the questions answered at the end of the webinar. And again, this is Cedar Gate Apartments, located in Houston, Texas, and it's 52 units. It's a value add investment opportunity. It is a 506B. So to make sure that you understand, a 506B is open for non-accredited and accredited investors, but the non-accredited must be considered sophisticated investors. And because we're part of the Big Dog Network, that establishes the pre-existing conditions for us to be able to offer this opportunity to you. So today we've got a lot of information to give. We're going to go as quick as we can. Make sure I can change slides. Why is it not? Well, there we go. So again, now see, it went 2 slides in a row. Sorry about that. Man, went 3 slides. This is really fast. Hold on, let me back up. Sorry, folks. All right, so Cedar Gate Apartments, this is brought to you in combination with Massive Masters. Massive Masters is a program that is a mentorship that is offered by Phil and Shanoa, Olivia, and the Massive Capital team. So we always put this out here. So if you hang out with successful people, they will brainwash you into believing in yourself and thinking that you can achieve anything. And Veteran is an example of this. I've known Veteran for a couple of years, and since he's joined Massive, I think it feels like he made an offer on a property every week. I know that's an exaggeration, but he's looked at a lot of properties. And if you remember some of my earlier presentations, you have to kiss a lot of frogs to find the prince. Veteran is a very good frog kisser. He has been looking and looking and looking and looking because, again, we want to find the right deal to be able to offer to our investors. So again, a disclaimer, Candace Major, they facilitate this presentation. So it's in a combination of ourselves, Massive Capital, but Candace Major does not endorse or vet the presentation. So I want to make sure that we have a disclaimer that all members are advised to carry out their own due diligence. Veteran will also have his own disclaimer to do, and this is something we need to do in part of our current regulations. So again, this is a lot of what we're going to be doing today. I've got one more slide. So again, it's for informational only, forward-looking statements. There's risk to all investments. We're not providing advice. We're eligible. You must be sure that you're eligible to invest. You can see we've got a lot of slides here for us to present. I'm going to do an overview of the property, and then I'm going to turn it over to Veteran for the nuts and bolts. So again, this is our executive summary for Cedar Gate Apartments, 52-unit garden-style multifamily community located in Houston's highly desirable Spring Branch submarket. So for those of you that know Houston, it's in the inner ring. We've got a little more information, but it's a very desirable area in the Houston. So again, we've done a conservative underwriting. We're looking at holding this property for 5 years. This property will produce steady cash flow, has capital preservation, and attractive returns. We're in a stabilized with solid occupancy, but rents are low and ready to be grown up. Again, we talked a little bit about the Spring Branch location. Veteran will talk a lot more about that. proven strategy. Massive Capital, we operate about 2,000 apartments, most in Texas and North Carolina and Colorado. So we very much what we know what we're doing. This particular opportunity averages an 8% cash on cash. It does a 19% IRR, internal rate of return, very important number for you to understand. And it has a 2.15 equity multiple. So again, if you give us $100,000, our goal and our projection within the 5 years is to return $215,000 to it. We have a clear rent upside. We have a proven value add playbook. There's no really new inventory coming on in this marketplace at all. We bought it at an attractive basis. And then, of course, there are some tax advantages with bonus depreciation and cost segregation. So we'll go a little bit more into that detail at some point, but we're going to go ahead and make this available. So I'm going to start here, introduce my good friend, Veteran. Veteran and I, we've known each other, maybe 3 years even. We meet each other at a lot of events all of the time. So I'm going to turn the presentation over to him. He's going to go through, and I'm going to try to keep up on moving the slides along and watching everything else. Go ahead, Veteran, my friend.
Thank you very much, Trevor. Thank you, everyone, and welcome to this presentation. My name is Veteran Acha. I'm the team lead for this project. I have more than 12 years of data analytics engineering, which I factor into underwriting and operations and financial aspects. So I have an MBA from University of Houston downtown. So you can see the rest of the stuff there. I'm here with my partner, Jason Hiams. Jason is a managing partner of his own company. So you guys know with commercial real estate, a lot of partners come together, right? So Jason oversees asset management operations. He has a couple of multifamily properties that he is managing, and he has more than 60 plus residential units as well. So Sharia here is the CEO of Massive Capital. He has been doing this for more than 7 years. He has more than 180 properties across several classes. He has 13 years into Fortune 10 companies like Royal Dutch Shell. He has done a lot of work. Also, he's an expert in analytics as well, and he has an MBA. And then Trevor, of course. Trevor is the big guy also, VP investor engagement in Massive Capital. I guess you guys know Trevor, but Trevor is he has a magic wand to raise capital. I should say that. So next slide, please, Trevor. Also, we have Jason Mayfield. Jason is one of our partners he's in Florida. He has completed more than 80 land transactions and many multiple multi-family syndications. We also have Fidelis. Fidelis is an investor and an advisor. He has a brokerage license, and he has more than 10 years of real estate investor experience, and he has a couple of residential units as well. And he was also a member of Big Dogs. We have Esa. Esa she has more than 12 years of nursing experience. She is very big with assisted living. She underwent the training with Massive, and she's helping us when it comes to assisted living and also land development. She's trained for that, and she's a nurse by career. And then the Massive masters, our big guys, the people that make sure that we do stuff right. We have Sanjay, Olivia, Phil, Shenoa, Mike, and Sharia. They keep an eye on everything we do to make sure we don't make mistakes. Market overview. Spring Branch is an infield submarket inside Houston's inner loop with direct access to I-10 and Loop 610. Historically, these infield locations outperform because land is scarce and replacement cost continues to rise. Next slide. Yeah, okay. So can you go to the next one, please? I try to make it quick and short. Let's go to submarket performance. Okay, that's fine. So you can see on the map, Cedar Gate is sandwiched between a lot of highways. You see the I-10, you see the Sam Houston Tollway, and you see the 290. And if you look carefully, you're gonna see in a little distance, you're gonna see 69, and you're gonna see 45. So this location is very key because it inhabits one of the affluent people in Houston, and you're gonna take note. You're gonna notice that the energy corridor is just right there on I-10. You know, energy corridor is where the big oil companies, the headquarters there. So this property is like 3 minutes drive away from the energy corridor, and away from Memorial City Mall, and maybe like 7 minutes away from Galleria, which is the biggest mall in Houston. It has a lot of employment potentials and all that. You're good, Trevor. You're good. Next one, please. So why multifamily? We're going to notice that housing is a basic necessity, and multifamily remains one of the most resilient asset classes. People always need housing, right? And workforce housing infill locations tend to perform best, even during a volatile market situation or economic situation. Next slide. Okay, let's look at the property. So I'm gonna just it's there, but I'm just gonna say Cedar Gate is a boutique 52 unit, two-story community built in 1973. Units are larger than average for the vintage, which is very good for us. And the property has already benefited from prior exterior renovation. Exterior capex has been there. You're gonna see the color is nice, and if you look on Google Map, you're gonna see exactly what you see here on Google Map. So it's a very nice looking building, even though the vintage is there. But believe me, the location combined with the large unit sizes, this is key. Next one, please. The unit mix is predominantly two-bedroom units, which typically show lower turnover and stronger demand because most people like the more than one beds. This supports durable cash flow while we execute the renovation plan gradually. So when we do these deals that has a lot of one bedroom, more than any other, let's say if a property has most of them one bedroom, that's not the best. It's still a deal, but it's not the best. But with this one, you're gonna notice that we have 33 two-bedroom, two-bath, and then three-bedroom, two-bath. So that is a good sign. You see, the proportion of one bed, one bath is very small compared to the entire number of units. That is a very great factor for this property. Next one, please. Okay, so you're gonna notice that Cedar Gate trails behind its comps when it comes to the rent analysis. Comparable properties nearby are achieving rents approximately 300 to 370 higher per unit. This gap exists today. So before we underwrite any market growth, we have to make sure that we are able to increase the rent if we need to, so that because that is where we fetch the returns for the investors. So as you see on this chart, Cedar Gate is very low down compared to the comps around that area. So there's great potential for rent growth.
And one thing quickly to point out here too is that even though we have the rent comps here, we're still not talking about getting up to the level of our competitors. So we're still below there. So we're not shooting for the stars here on rent increase. We're definitely increasing, but we're still staying very competitive.
Yeah, thank you, Trevor. So I believe I'm going to mention that when it comes to the financials, because maybe I should just say it now so I don't forget. So for the first year, we're going to keep the rent growth flat, 0% escalation for the rent growth. And then from the second year, we're gonna keep 3%, which is standard for this industry, 3% every year from year 2 to year 5. So first year flat. So even though I believe strongly that we're gonna be able to do something to increase something, but we just to be conservative, we keep it entirely flat for the first year. Yeah. Our strategy here, our approach prioritizes risk mitigation first, and then rent growth. We want to be able to make sure that total capex is approximately 333,000, deployed primarily in the first 12 to 24 months, with focus on interior upgrades and operational efficiency. What this means is that as we saw on the picture, or the outside of the property, the colors are good, they are there, it looks beautiful, but then we're gonna need to there are 11 units that are upgraded, that have been upgraded, so which means that 41 units are still classic. So we're going to explore the opportunity to upgrade these units, not like year one, no. We upgrade as soon as a tenant moves out and the unit is vacant. That's the opportunity to upgrade, and then we'll do that and test the market, how the market is absorbing the increase that we add for the upgrade. If the market is absorbing so well, then we just upgrade. As soon as a unit is vacant, we upgrade it, because we're gonna get back the money from rent increase. But we're gonna test it and see how the market is gonna accept that. And then you're gonna see on the pictures, you're gonna see that the units that you see, the one in the middle, that is a upgraded one, that one, yeah. And then the one on the right, so the one in the middle is the kitchen. You're gonna see the backsplash, that is upgraded. Those are what we call upgraded units, the one in the middle. And then the classic one is gonna come in a subsequent picture. I'm gonna show you when I see it.
And one thing to point out here too, that all of the units have tile floors and they're all in excellent condition. So it really helps save a lot on the turnover, that you're really just doing cosmetic changes, paint jobs, some new knobs, really helps out with the upgrades.
Okay, so exterior improvements improve visibility and curb appeal, while operational upgrades like digital rent collection, reduce leakage and improve tenant experience. All of these are strategies that we're gonna put in place to make sure that the tenants are happy, because happy tenants, they're gonna make sure they pay their rent on time, and it's gonna help us to achieve our targets. Yeah, and then you're gonna see here on the left, that is the classic unit. On the left, it is written the classic unit, and you see that there is no backsplash, and backsplash is one of the key things that we're gonna do to upgrade the unit. So there are many other things like appliances and all that, but from the picture you can see the difference between the upgraded unit and the classic unit. And then on the right, you're gonna see these are comps. So because the comps, the rent for the comparables that we saw before was the gap was very high, like 300 to 370 between Cedar Gate and the comps. You see here what the comps have inside. If we achieve this, we should be able to charge it, like as Trevor mentioned. The goal is not to charge exactly what the comps are charging. We want to increase just a little bit. That way, we're gonna make sure that our property is gonna always stay more than 90% occupied. Yeah. Okay, renovation plan. So we're gonna, you see on the first picture, you see we were thinking we're gonna explore the option of this is some kind of curb appeal, right? To write the name of the apartment on the wall that is higher up, rather than on a signboard on near the street. This is something that we're gonna explore. It's gonna make it like beautiful and attract people even from a further away, right? We're gonna make it very bright and very captivating. And then we're gonna check the plumbing and infrastructure to make sure that the street, the parking lot, everything is in order. Maybe assign parking spaces for close to the doors of the various units so that no one can park there. So that maybe it's raining, he can just jump out and get in. Stuff like that. Those are stuff we're gonna do, and we're gonna make sure that we reduce unexpected repairs. Because, for example, by the way, this property, the roof of this property is like from 1918, and you know the roof is one of the stuff that can take away investors' returns. So with this property, the roof is from 2018, so that is a check. We check that one. Another one is the plumbing. We have engineers check everything: structural, foundation, roof, plumbing. Those one checked. So there's no need, no concern about unexpected capex. So all those are covered. Okay, so the property is already cash flowing. It is 92% occupied, as we mentioned before. NOI is strong, and we plan to run it for 5 years. And then with the improvements that we mentioned, we believe that together with operational improvements, we're gonna have a property manager that is gonna. So we have some properties around this area, and because this one is just 52 units, we have bigger ones, right? Because this is smaller one, 52, we're gonna leverage the presence of a property management company around this area to run this one remotely. They only go there as needed. That way, it's gonna help us conserve costs, and they're gonna be very efficient because we are already using them on some properties nearby, and we know how they work. So it's gonna help us to maximize returns for our investors. So we're gonna run this, like I mentioned, for 5 years, and then exit at approximately year 5. And then the exit cap rate is 6.75, which is very conservative, very, very conservative. It is possible that we can exit at 6.5, but you know, as you guys know, the way we do underwriting, we try to under promise and then over deliver. And then the rent upside, we already mentioned. That is why we love this deal, because the rent upside is there, a $360 some dollars. That is very good. We're not going to be adding 367. No, we're going to add what the market is going to be able to absorb, and that we're going to the amount that we're going to add is going to be what is going to make sure that our property stays more than 90% occupied at all times. And then there are great top-rated schools in the Spring Branch ISD, which is going to be a very good place for families. You know, people have kids that go to elementary, high school, and stuff like that. So it has very good schools. And then just the look of the property and the market is so strong. I already mentioned the Memorial City Mall, Energy Corridor, Galleria, all those, they are just close by. So everything about these deals checks out. And the average household income, 120K. This is good because people that live there, we want to make sure that they will be able to pay the rent. No late payments, no consent, no bad debt and stuff like that. We check all those. All those, they are being checked and they are on point. Okay, let's talk the numbers now. So I would like you guys to pay great attention on this part, because you guys, we mentioned that if someone invests, if someone invests 50,000, you will remember that the average cash on cash was like 8%. So if someone invests 50,000 year 1, because we have pref at averagely 7%, year 1, he's gonna have year 1, the cash on cash is going to be 7.7, year 2, 9.2, year 3, 9.3, 9.8, year 4, and then year 5. So this is going to give an equity multiple over the life of this project at 2.15, which means you invest 100,000 in year 1. At year 5, you are getting 215,000. How good is that? Nowhere we can find that, right? Okay, so also the loan type that we are using for this project is agency loan, and the good thing is that it's non-recourse. This is the loan amount that we're going to be taking from the bank. After, we're going to use 20% down from investors to close on this project. The loan amount is 3.9 million. Interest rate conservatively is 6.5%, and it's a interest rate that will lock it for 10 years. Amortization 30 years, and balloon 10 years. Investment sample. This is another place to pay great attention. Assuming that someone invests 100,000 year 1, because we offer 7% pref. Pref means like preferred returns. We want to pay our investors first before we get paid. We are running the project. That's what is called pref. So you're gonna notice that average cash on cash return on the second column, you see 7.7%, 9.2%, 9.8%. That is the amount that our investors must receive first before we get paid. So that said, year 1, investors going to receive $7,700. Year 2, $9,200. Year 3, $9,800. Year 4, $7,800. Year 5, $8,400 plus the profit from sale or refi plus the initial amount that they invested. That means you're going to have at year 5, the investor that invested 100,000 is going to have 128,000 plus the initial amount that they invested, which means it's going to be 200 and I guess there may be some errors here.
Yeah, there is an error. This isn't adding up here, so we'll need to fix this slide.
Yeah.
So all of these add together to get a larger number. So we'll fix that on the deck that we send to you.
Yeah, I noticed that. Yeah, when I was talking about it, I saw the number. Yeah, I'm gonna fix that. I'm sorry, guys. Okay, so this what is supposed to be here is supposed to be 115,000. Here, where you see 128,000, it is supposed to be 115,000, which means that at the end of year 5, the investor is gonna have 115,000 for returns plus the initial 100,000 that they invested, which gives a total of 215,000. I don't know where else we can get that in this economy. So yeah, thank you. And you're gonna see some nice pictures about the pool here. You see, it has a pool, very nice. Yeah. Okay. So the market overview, you're gonna notice this property is near the Memorial City Mall, Galleria, and then you see how on the map below it is sandwiched between all the big highways that we mentioned earlier. Yes, next one, Trevor, please. Okay, so what I was mentioning about 7% pref, this is it here. That's how we calculate what we pay our investors first before we even before anything comes to us. Investors must, we make sure that they have 7% of the returns first. 7% of the returns, 100%. Okay, let me explain in another way. So for every return that comes in, for the first 70% that comes in, investors take it all, and we make sure we pay them 7% first before the GP's gonna see anything. Trevor, was that clear, or I should say it again?
Yeah, I think it's clear. So basically, until you earn 7% on your money, we don't earn any money as a general partner.
Okay, thank you. I wanted to make sure that was clear. Okay, thank you. And then 8% is average cash on cash, all the numbers that I read on the previous table, and then 19% of internal rate of return, which means like at what rate is your money coming back to you. And then equity multiple, of course, if you invested 100,000, just take 100,000 times 2.15, which is 215,000. That is the meaning of this 2.15 equity multiple. This X is your invested amount. Just multiply it by 2.15. Next, Trevor. Okay, when we do projects like this, we try to think about what can happen. What can happen that will make our project not to succeed? We explore all possibilities. One of them, let's say every investment has a risk, right? And what matters is how we mitigate the risk, not that we are scared of risk. What we do, we already foresee the risk before it even comes to us. That way we are well prepared to neutralize or mitigate it. We do that through conservative underwriting, reserve. So we have kept, in our model, we have kept operating costs for at least 3 months to take care of any surprises, such that in case something happens, we already talked about the roof, which is very good. That's one of the big surprises that we don't want to happen. That is covered. Another one is the plumbing. That is covered. We took engineers there. So what can happen that can make the project to large unexpected expenditures? That's what we are talking about, risk. So we have used conservative underwriting. We are keeping aside 3 months of running expenses aside, and it's going to be on the bank account. In case something happens, we just go to those funds and take it out and use it. So we do that so that we don't want to go to the investors and say, oh, something happened, we need money. We try to avoid that. We want to make the project to take care of itself. That is why we are keeping reserves for at least 3 months. And then also we have insurance. We're gonna have an insurance policy on this property for another flood or stuff like that. We're gonna cover everything that happens because of disaster, stuff like that. We use insurance coverage. We're gonna cover the property. In addition to that, and above all, we are using experienced asset managers. Very important. Myself, I am there. Jason is there. Sharia is there. We're gonna be running this property together. You guys already saw when I introduced the team, you saw all the experience that together we bring to run this project. So everything we are prepared for any risk that may occur. Next one, please. So project timeline. We are done with LOI and PSA. Due diligence was this week, and then right now it's open for soft commit. Trevor is going to throw more light on that, and then at some point we're going to switch to 506C, and then closing is scheduled for the ending of February. And then below here you see my contact, you see my name, my phone number. In case you need to reach out, it's there.
Awesome. Very good. Thank you. So I just put it in the chat. If you're interested in making a soft commit, you would either scan this or you can go to this link. The document should be up soon for us to be able to do the investment. But we'll have that. But this one is a very small raise. It's going to fill very quickly. We've already got quite a bit of interest in it. Here's also my link to book a call. And I'm going to stop sharing and see if anybody has any questions that we can answer for you. We cannot do a property visit while we have it under contract. We're not allowed, someone else owns it. You could do a drive-by and take a look, but please don't disrupt residents. Please don't say the property is being sold. That would interfere with our contract and agreement with the seller.
Okay, I see someone is asking what is the budget for each unit rehab. So as we mentioned, 11 of the units have been upgraded, which means 41 of them are still to be upgraded if needed. We have kept aside $2,500 for each of the 41 units. to do a light upgrade. And as you guys know, we can only upgrade only when it is vacant. There's no way 41 units can be vacant over the period of 5 years. I don't think it can happen, but we just kept aside 2,500 for each unit.
I'm not sure what you're asking about deferred appreciation. Sorry.
Yeah, so yeah, Trevor, I am in conversation with one company for cost segregation.
Yeah, cost
Maybe that's
segregation is different than deferred appreciation. So that's why
okay. Okay.
I'm not sure I understand the question. I don't know if you want to unmute.
Yeah, maybe you can ask it in other words.
Yeah. No, the interest only is for the first 2 years, and it's 6.5% fixed rate. So
Yeah.
we have 2 years of interest only. It's a 10-year loan. Our goal is to be able to get out it in 5 years. And this debt will not be reassumable because there won't be enough left.
Non-recourse, yeah. Also non-recourse, yeah.
The purchase cap rate?
Purchase cap rate, I need to check. Should be around 8.1%, but I need to check to be sure. And yeah, I think around approximately 8%.
And the sell was at 6.75. I remember that from the presentation.
Yeah, yeah.
So I don't want to go ahead. Did someone ask a question? So I still want to make sure I understand projecting for the deferred appreciation. So we will be doing bonus depreciation. We'll be doing a cost segregation study. And normally that will produce that about 60% of your investment in year one would come back to you as a passive loss. I don't know if that's what you're asking.
Yeah, so Trevor, this company that I'm talking to about cost segregation, they submitted a quote to me. It says that it's gonna reduce about 273,000 from the value of the property, which is gonna like come back to investors, right? It's gonna be investors gonna benefit from that. So that is something we can look up and really get a clear answer for that. Yeah. Maybe Jason, take down his name. Maybe we're gonna need to give him an answer about deferred appreciation.
Yeah, or you can book a call with me.
Yes, or with Trevor, yeah. Any more questions?
Those are good questions. Thank you.
Mm-hmm. Are we all happy or? Trevor, I guess, okay. What occupancy rate are your numbers calculated on? So we have physical occupancy of 92% and economic occupancy of approximately 90%. That is normally with the underwriting, we keep a buffer. Like going to year 3, we try to make sure that even though our goal is to get the entire property occupied, but we keep some reserve, maybe like 6% vacant for year 2, year 3, year 4, year 5. We keep that, but we hope that we can achieve 100% occupied. But with conservative underwriting, we have to keep that allowance. Yeah. Yes. Does a property currently have on-site management? Yes. So what actually happens with this property is that there's a property manager on site, but this property manager, the way they do it is not that professional, and they try to use someone who is living there to make sure that she coordinate the people, but she's not that so experienced. But we are bringing professional property manager who has properties around there and can coordinate the. And we're gonna be using. I'm talking to one guy. He's gonna be using AI agents to initiate the contacts with the residents, prospective residents, and then the AI agent is actually going to reach out to the prospective tenants, book a call, make calls, book a call, and then once they schedule for a visit, and then the property manager is going to go do the tour. So I didn't know that exists. I just learned that from this time. Yeah, thank you. Good questions. Good questions. Current renewal rate. Uh, Current renewal rate. mm, So, given that the property is 92% occupied, I strongly believe that given the location and the size of the property and the amenities around there, personally, I don't see any reason why there should be any vacant unit around there. Maybe it's because the property manager is not an experienced professional. I think once we take over, renewal rate is going to be very high. Just a few vacant, we're going to try to make it full quick. What percentage of current tenants are renewing? From I need to check that up. I need to find out the answer for this one for chat. From what we did on the from our analysis, the tenants, very few of them, the contract maturity date is like many months ahead. A very few, maybe 2 or 3 of them, is in the next 2 3 months. So sometimes we are even happy that they should maybe create space for us to upgrade and then increase the rent, right? So yeah, that's one thing too. When leases come up, do they renew or move on? Normally, when the lease is up, uh, we have to renew if they are willing because we need to increase the rent a little bit,
I
right?
think they're asking, do we know what the existing is, what the existing renewal rate of current tenants is for the current owner?
Yes, I already answered that. I said I'm gonna try to look for exact,
Okay.
precise answer for that one. Yeah, have to
And
leave.
the purchase cap rate was 8.28.
Yes, okay. Thank you, Trevor. Yeah,
I got people working on the side getting me.
yeah, yeah. Thank you,
Awesome. Thanks
Trevor.
for coming, Sue.
Yeah. Uh, uh, okay. I think 2 people we have to get them answers, right?
Yes, we still owe some answers. Yes.
Mhm.
So go ahead and book a call with me. We will have we'll have the answers within a couple of days. Awesome. Great questions, though.
Yeah, yeah,
Did
yeah.
we make sure we got them? Oh, there are no other amenities other than, well, there is a laundry facility on site. And that's the only other services on site.
Yeah, this little building we saw near the pool, that is the laundry, is there. Yeah. Any security official on site renting? That we don't know. We don't know that.
I
Maybe
don't
we're
believe so, though.
we don't know. Normally, the area is no crime. Crime rate around there is pretty low, so there's no call for concern. I believe there are security cameras there, right, Jason? There are security cameras there, so crime rate is pretty low in that area.
And it is a pet-friendly property, correct? They have pets on it.
Yep, 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 yep.
Awesome. All right. Any more questions? So a copy of this recording will go out sometime tomorrow or the next day. The young lady who does it all, she had a family emergency, but I think she's back in the office sometime tomorrow. And we'll make sure that we get this recording sent out to you. In the meantime, we've shared the link for any soft commitments or to book a call with me. Any last minute questions? Awesome. Thanks very much, everybody, for showing up. Take care.
Thank you. I appreciate your time.